We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I will be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and then I didn't know whether to re-short at the close. And then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos,
That's great.
kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 2nd wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. Let's make sure you and I, we do all that we can do to have a wonderful Wednesday. I'll do all that I can do during the next hour to teach you how to master the tools for trading, and that includes the tools of the mind, because when you and I, when we master the tools of our mind, we begin to think like a strategist, and that's really important as it applies to every single aspect of our life, especially trading. Now, during the next hour, you'll hear me use tactics, technical terms, such as A to B equals CD patterns, Fibonacci expansions and retracements, Gartley and butterfly patterns, and of course, Japanese candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus only on tactics, you and I know that to really achieve our goals and our dreams, we've always got to think like a strategist. So today and every day, let's do all that we can do to think like a strategist, because strategists will slay the tactician all day long. Let's take a moment. Let's review one of our tools, a tool I call Fortune Knocks at the Door of Those Who Are Prepared. You know, Louis Pasteur, he once said, in the field of observation, chance only favors minds which are prepared. Even in the little things, those seemingly insignificant events of life, it's important to be prepared. Opportunities to learn new things are available to us all the time. Nearly every moment offers opportunities to grow and expand our consciousness. How often, folks? How often? That's right, all of the time. A true story here. Thomas Carlyle spent 2 years writing his great piece of work about the French Revolution. That was back in the 1830s. He literally poured himself into his work, striving to capture on paper everything possible about the French Revolution. He bundled up this large manuscript and took it to his close friend, John Stuart Mill, for Mill's personal evaluation. A few days had passed, and Mills rapped at Carlyle's door, and when Carlyle opened the door, he noticed that Mills looked gravely ill. "What on earth happened?" asked Carlyle. Mr. Mill told Carlyle that his maid had used the bundle of papers, the manuscript that Carlyle had spent 2 years writing, to start a fire. That's right, folks, 2 years of his life gone up in smoke, literally. Days passed, depression set in, and then one day, peering through his window, he noticed a brick mason building a wall for a neighbor. Brick by brick, the mason worked gently and lovingly to build the wall. Suddenly, an idea struck Carlyle like a flash of lightning. He, too, needed to be a brick mason, and he reconstructed his manuscript brick by brick. Soon thereafter, peace came to his mind, and the ideas just simply began to flow in. Carlyle pushed aside defeat and produced what became the most colossal work of his lifetime. Yes, folks, brick by brick, word by word, thought by thought, dream by dream, chart by chart, indicator by indicator, you and I, we too can build the substance from which the masterpieces of our lives are produced. Carlyle's book, The French Revolution, published in 1837, still to this day is a source for those that wish to get an accurate account of the French Revolution. Brick by brick, folks, become the brick mason of your life and build your masterpiece. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up 12 points. They're trading at 16,888. S&P up 3/4 of a point, up at 1966.50. NASDAQ up about 0.3, trade down to 38.86. Russell 2000 is flat out here. King dollar up 165 ticks, trading up 16 cents at $80.10. Gold is flat. It's up 40 cents. Silver down a penny. Light sweet crude off 61 cents. Natural gas down 4 pennies, off 1% here this morning. A quick peek across the globe. We'll see over in Europe. We've got the DAX is flat. It's up 9 points. FTSE up 15 points. In Asia last night, after a handoff of some major fireworks here in the U.S. right out of the gate, the Nikkei up 43 points. The Hang Seng up 358, 1.5%. And the Shanghai up 0.44%. So, fireworks it was, right out of the gate. Right, we had futures were up right about this time, about 40 points or so, and as soon as the market opened at 9:30, I looked at my screen, and the Dow futures have punched up 100 points. So, big fireworks. Was that the finale? Nah, I don't think so. I think that was maybe just round one of the fireworks. We took a look at. In fact, I had a couple of emails, kind of interesting, so from a couple different email addresses, asking me if I ever thought that the move higher was going to end. When was the, so in essence, I guess we can take a look at when is the finale of the fireworks. So I thought about that. I thought about it and said, well, because when I take a look at stock charts, we take a look at patterns. Like I can show you some bearish patterns, and there's nothing more bullish than a failed bearish pattern out there. And we've had a bunch of them. Last week we had, two, how about that? Two planetary index dates. 2 days within 4 days of each other with only two P index dates. That usually would mark a top with the market moving higher. No. We had key reversal sessions in the market, New York Stock Exchange, S&P, ES Mini. All that took place last week as well, last Tuesday. All of those failed. So I had to really think about this. So here is my at this moment, here's my conclusion. And the answer to that question, I'm going to go ahead and put up this chart up on my screen here right now. This chart here that I'm showing comes from the Ensign Windows software. Great software package out there. You may want to take a look at that. But let's take a look at what I'm looking at here is the S&P 500. Now, it's a daily chart. It's the only thing that I can figure when I go back and take a look at patterns, because we're pattern recognition experts, we certainly try to be pattern recognition experts, is I went back and looked at the chart and just plotted on the chart, when did QE1 come to an end? When did QE2 come to an end? The reason being is because, we've got, I think bond purchases are up to still at about $35 billion. Is that right? Maybe somebody in the den can confirm that for me. Well, whether it's 35 or it's 25, it's out there. It's a lot of dollars, that are being put to work. That are somehow funneling through the market. Thank you, Pete D. So yeah, 35 billion. And if we take a look at, just interestingly enough, when quantitative easing won, when that first round ended, which was in March of 2010. And if I take a look at March 31st, 2010, March 30th, March 31st, the S&P right around the 1169 area. Moved up slightly, up into a high, so for another 25 days or so, up into the April 26th standpoint. But the real deep correction, was it coincidental? I don't know. I believe we had the flash crash. Flash crash, I think, was 2010. not 2011. Either way, no matter what it was, we had QE1 that came to an end in March of 2000, and you saw a pretty decent move down. You went from, the S&P went down from 1219 and actually made a low on July 1st. Interestingly enough, July 1st made a low out there of 1010. For those folks who think that between June and July that the market only goes up, well, that's really not the case. We just kind of proved that point right here. Then, if we take a look at QE2 out here, quantitative easing number 2, that ended in June of 2011. June of 2011, June 1st, June of 2011, let me come all the way out here. June 30th, let me just kind of move this over here. June 30th, 2011, I need to shorten it up a bit. So June 30th, 2011, you had the S&P out at about 1320. Moved just slightly higher up into July 7th, 2011, and then the market went from a high, had made an intercession high on July 7th, 1356 was the number, made a low back on the trading session of October 4th out at 1125. Pretty decent move to the downside out here. So my conclusion at this stage is that this market probably not right as the bond purchases and as QE3 ends, but sometime within a 30-day period of time, if this pattern repeats itself, that's probably when we see the actual grand finale inside of the market. So that's my thoughts at this stage. But if you've got some different thoughts, just give us a call at 877-927-6648. Happy to field your call. Let's go take a look at the futures contracts here. Let's go see what each of them are doing. We'll take a look at the Dow futures right now. When we took a look at the Dow yesterday, we were dealing with the Dow just trying to squeak back into its market profile support level, which was at 16,769. Of course, more than squeak back into it. It made its way all the way up to the resistance level, which is right out here at the price point of about 16. Well, it's really trading at it right now, 16,888, somewhere right around there. So we can see that level acted as a resistance area. Price getting above that sends the Dow futures into a full-out bullish mode out here. That is on the daily time frame. A quick peek at the weekly time frame for the market profiles. What are market profiles? They're great tool and an indicator to help us identify natural areas, more than natural areas, areas of resistance and support. The weekly chart out here showed that resistance was out at 16,401. So weekly chart inside full-out bull mode out here. And so just watch for the Dow futures. They close above that today, tomorrow, right around the area we're trading at right now. That would be bullish. If they can't break out here and the market decides to take a rest, again, you come back and you take a look at the first area for a pullback in the Dow. Would take it about the 16,829 level. 16,769 would end up being kind of your ultimate support out there. That's inside the Dow. The Dow is the only one on a daily chart, the only index of the four that is not above its resistance area of its market profile. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, in the pre-market out here, moving to the upside. A company called Shutterfly, SFLY. Many of you may have used Shutterfly for your photos or turning photos into GIFs out there. When I was in that marketplace, they were a version of a competitor of mine. They closed at $43.51. They're trading out at $49.70. I don't see any news behind it, but let's take a look at Shutterfly. As we take a look at this stock chart here, one thing that you'd want to notice out here is if you take a look at the pattern, as it was making a low back here on May 16th, 2014, formed a nice little hammer candle. And if we come all the way back to the trading session of March 28, 2014. Price there, the low of that trading session was 41.09. The relative strength reading on there, I need to turn that back on, was measured somewhere below 25 is what it looks like out there, 23.6 or so, right around there. And what we'll see here is over the course of time, it actually, when it formed that hammer candle, it had made a lower low, and it did it on, less relative weakness out there. And that's really what you like to see. And we've seen it come off of the bottom. The price low on that trading session was 36.30. If we take a look at the market profiles, the very next trading session, price got back inside the support area. That's the green horizontal line that you see on my screen out here. What's interesting about this, Dr. We started taking a look at these market profiles yesterday and applied them to charts. We were looking at IBM, looking at Amazon, a number of different charts out here. And certainly what I noticed, and I think maybe you noticed it as well, when a equity index, no matter what it is you're looking at, and maybe a great use for these market profiles out here, is take a look at when it does change its trend, it never breaks through, may pierce it, but never closes below the unfair lows out here. And then you had another market profile that began June 2nd through, if you're just listening on the radio or your mobile device at TFNN.mobi, remember you can always catch the archive of this show on Channel 9 and the live stream, of course, by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices. Click on that. The show streams live to you. You'd be able to see that another market profile had formed here June 2nd through the period of June 11th. That low was right around the probably right around the 39.52 area. That held as support. The next market profile is held as support. The current market profile is held as support. Now, if we take a look where Shutterfly is likely headed to, this thing had a big downdraft, so there's a supply line out here. There's folks that in essence have been stranded, at a minimum stranded from the March 17th, March 18th area when Shutterfly traded down with shares of 3.9 million. The top of that box out here, the top of that area, top of that break to the downside is right around the price level of 48.05. Let me go see what's it trading at right now. 49.78. So it's going to, this is really going to really find out what kind of strength is in here. Is Shutterfly, in the pre-market, it's trading into the gap. If it can continue, and maybe wants to go try to close that gap. Closing that gap would take it down to take it up to a price level of $50.18. Hey, if Shutterfly closes inside $50.15 with some, $15.18 with some volume there. And volume you'd like to see is more than the downdraft. That was a trading session for March 18, 3.9 million shares. That would be a very bullish message out here. So we'll see if those folks are just looking to get their money back because, there certainly are folks that wrote it down because they didn't use stops from the $50 area down into the, 36 area. That would not be a pretty picture out there. So that's Shutterfly. That's leading the charge dollar-wise right now to the upside. We've got Solar City closed at 71.22. It's trading up at 74.02 right now. Let's go see what Solar City is going to do. Same kind of a chart pattern out here as Solar City came off of its lows. The unfair low, the green horizontal line, has acted as a support area. Right now, Solar City looks like what it wants to do. It's had a couple nice signs of strength out here. Big one on June 17th, the very next session as well, June 18th. I don't see any real forms of resistance inside this equity, so it looks like Solar City wants to go test the swing point high from February 26th, somewhere in the range of $81.18 to $88.35 out there, so that looks pretty bullish. To the downside here, we've got GoPro. We won't spend much time taking a look at that. It hasn't been trading long enough, but Delta Airlines has been trading. It's been long enough. It's currently priced out at about $39. It closed at $40.31 out here. It doesn't really suggest the revenues were up by about 4.5% out here. It says June consolidated passenger unit revenue rose 4.5%. So pricing right now at about $39. Let's see, $38.73 is its support level. It's unfair low. A close below that today would not be a good move. In fact, a close below June 12th, 38.10 with volume would set up an A to B equals CD to the downside. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 6 points, trading out at 16,961. S&P up 60 cents at 1973 and change. NASDAQ up 3 points at 44.61. Russell 2000 off 62 cents. NDX 100 up 4. New York Stock Exchange up 3. Gold up a couple bucks right now. Silver up 7 pennies. Leading the charge the upside. Still Shutterfly. Greenbrier. GBX is a ticker symbol up 11% here this morning, up $6.49. Constellation, Constellation Brands, STZ, makers of or exporters distributors of, probably Stella, one of the better beers out there. So Belgium coming up nice and strong yesterday, beating our boys from the U.S. But what a great game! What a great overtime it was, with some nice chances out there for the U.S. to go ahead and tie the game up out there. But in any event, Solar City up $4. Congratulations to them. They put their heart and soul into it. That is for sure. They never gave up. That is the beautiful thing out there. Amazon up $3.80, up 1%. Rackspace Holdings up $2.80. That's up 8% out here. Kihu 360 Technology up $1.80. The downside, you've got CalAmp Corp, KEMP, is looks like their camp is burning, down 13% off $3. GoPro off $3. Martin Marietta MLM down 2% this morning, about $3. Trimble Navigation navigating to the downside, off 5% this morning, down $1.90. Voxeljet VJET off 6%. Harley Davidson, the hog out there, down about 2.5%, down $1.80. All right, so where do we go to take a look at? What do we want to take a look at in the market? Let's go take a look at currency pairs. Let's go do that. See what we have going on in currency pairs, and we'll go cover the metals. We'll take a look at their what they are doing. Currency pair, Euro Japanese Yen out here. Euro Japanese Yen having formed a 0.618 Gartley sell pattern out here. No reversal signal, though, yet. So this pattern here could easily be taken out, and if this currency pair gets bullish here, in longer term, the larger pattern, which continues to hold out here, is a 0.786 Gartley buy pattern. It's only really made the, let me just make sure here, I think it's made the first move. It's made the dead cat bounce. So the next move on this currency pair would need to take out the swing point here from June 9th. If it does that, which is the 140-ish level, 141.55 would be in its cards. That'll provide some fuel in the fire. Let's go take a look at the Euro US dollar. Let's go see what it's doing. Here's a weekly chart for the Euro US dollar. We know that price here had broken out, or I know you know, the price had broken out here from a long-term descending price channel, a long-term descending trend line. Broke the channel in February of 2014. It's a weekly chart we're looking at. Broke through the trend line back in March 7th, 2014. Stayed above that area, but came back and tested it, got back inside both the trend and the, never really got back inside the channel line, maybe for a day or so, the weekend of June 13th. But right now, just kind of navigating in between its channel line and trend line out here. It looks like more of a sideways-ish type consolidation pattern. That's on the weekly chart for the Euro US dollar. Let's go take a look at a daily chart out here, see if there's any patterns to speak of that we can take a look at out here. You know, this really shows the potential consolidation, low and high on a daily basis. So the low out here, let's go ahead and we'll mark that in with kind of a, with a yellowish pattern. So here's your consolidation pattern inside the Euro US dollar. If it breaks up topside, it'll be equivalent to that move. If it breaks downside, it'll be equivalent to that move as well. Let's look at some other currency pairs. How about the US dollar Japanese yen? US dollar Japanese yen on the move to the upside. It forming a 0.786 Gartley buy pattern. Now this one here has some oomph to the upside. As this here having a now this is a smaller pattern, so I show two patterns on my screen out here, one within the other. The larger pattern that would complete at the 99.82-ish mark. If this smaller one would have failed, and it still can, but at this stage here it has not. So we'll take a look at what's working out here. But if it does fail at any point in time, you'd likely see price in the U.S. dollar Japanese yen head down to the $99 area. At this stage, the smaller pattern, this is smaller as a daily chart. It's coming off the low of May 21st. That's your X point. If you go from that low to the high that came in on June 4th, what you'll see is price move down into the 0.786 area on June 30th here. What was nice about the June 30th session, as this pattern here was forming, a little bit troublesome on the day of June 27th. Why? Widest ranging bar. You don't like to see a pattern get completed with a wide ranging bar. However, that was alleviated on the trading session of June 30th out here because you had a small little bodied candle, little spinning top out here, and then yesterday a nice bullish engulfing candle out here. You're seeing some follow through the upside. That says this pattern here is valid. Where is it that it can trade to? Well, every Gartley pattern has 5 potential outcomes. Very first outcome is the dead cat bounce, the 0.382 retracement of the A to B equals CD pattern. You might say, what the heck does that mean? Markets tend to make this little lightning bolt out here, and that lightning bolt begins. That's what we call our A point. That's your swing point high. That's the one from June the 4th. That's your A point. Your B point is down here on June 12th. Your C points, the market does all the work for you. It does the first three legs for you. Makes a 0.618 retracement into the June 18th area at a price level 102.34. So it gave you the 1-to-1 A to B equals CD. To the upside, I'll show you what that looks like out here on this currency pair. 1-to-1 would have finished out at 101.15. We only saw a low down here at 101.22. But like Barbosa, Captain Barbosa would tell Jack Sparrow or anyone else, we just use these patterns here as guidelines, not something that has to be exact. Now, what we're seeing here is the bounce, at least a bounce. Maybe it is more than a bounce out here. We're seeing follow through today. 101.82 is the first target. Second target becomes 102.19. I would expect that, based on the way that we're seeing the U.S. dollar Japanese yen move, I would expect that to be a minimum target out here at 102.19. Your third target, 102.45, the 0.786 retracement level. Let me see what else we have here. And it's really at that area. So here's a key. So this is the U.S. dollar Japanese yen. You'll see a red diagonal line coming across my screen out here. Now, that's really kind of like the channel line out here. It's close to it's the channel line. So that's what, and the channel line here, what I'm using is I'm using the body of the candle, because the body of a candle is the essence of price out here. It's not the wick. The wick of the candle, the shadow of the candle, whatever you refer to them as, nothing more than the extreme emotions of that trading session out here. But the body is truly the essence of price. We use the essence of price. We use the bodies of the candle to help us identify channel lines. I only have the top channel line drawn in here. But why is that important? Well, because that should be a natural area of resistance. If, in fact, the U.S. dollar Japanese yen breaks that channel line, which is probably somewhere around the 102.45-ish type range, that's your 0.786 retracement area, then what that will be suggesting to us is a change in trend, and a change in trend to the upside. The U.S. dollar Japanese yen wanted to then make a larger move topside. You certainly wouldn't want to be short if it breaks that channel line. Of course, you might say, well, how can you say that, Steve-O? Well, the reason that I would say that is let's go back and take a look at another instance of that. Here's another channel line. This takes us back into the May 2013 level. Same red diagonal line coming across my screen out here. And price broke above that price channel on November 8, 2013. When it did that, it made a expansion move. It made an A to B equals CD to the upside. If we take a look at that A to B equals CD, we'll start with the low down here as price was in the oversold area of its 14 period relative strength indicator. That's your A point, the June level of 95.12. Your B point out here is the July 8th high, 101.52. The C point on this was right down here on the trading session of August the 8th out here. Made more than a 1-to-1 A to B equals CD. Remember, only 40% of the time are you going to get a 1-to-1. It made very close to the 1-to-1.272 A to B equals CD. So that channel line, that red diagonal line on my screen or on your screen, if you trade the U.S. dollar, if you trade the currency pair against the Japanese yen, make sure you have that line drawn in there, because that would be a breakaway to the upside. Let's take a look at the Great British Pound. Let's go ahead and finish off the primary three out here. Great British Pound, U.S. dollar. This has an A to B equals CD pattern that it is trying to complete out here. 1-to-1 price projection takes you to 172.28 out there. So that's what's going on inside the currency pairs. Let's go take a look at Goldilocks, silver, light sweet crude. Let's go see what we can find out here. Let's go take a look at our market profiles, see what they have to say to us. We'll take a look at gold first. It's up a couple of bucks right now. If we take a look at gold, very key today is breaking above, closing above. It's been struggling here for the last day. Really just the last day. 1326.60. Still the number out there as its unfair high. A close above that today would be bullish and would signal the next move to the upside could be forming out here. A close back below that level, 1326.60, says 1299 to 1293 would be the airy-ish type range you would be looking for as a first pullback and a potential buy into gold. If we take a look at silver out here, silver up about 7 cents right now. Silver on its daily chart well above its resistance area. Silver here stronger than gold. If we take a look at natural resistance area, it still says silver ought to go test the swing point from February 24th. In the 21.55 to 22.22 type area, but still trading sideways here over the last couple of trading sessions. Light sweet crude, if we take a look at its market profile, this is actually starting to potentially today could actually turn a bit bearish here when we take a look at some moving averages, but really bearish inside of this commodity. You can see it's made a higher high. It's done it with less relative strength out here, but right now the pullback is rather meek. 103.48 would be the area that light sweet crude would need to close below in order to suggest a real change in trend would be underway. So that takes care of the currencies, that takes care of the commodities. Now the question is, hey, what are these markets doing? Where are they headed to? You know, I gave you my what do you want to call it? My hypothesis. My hypothesis as to when this really comes to a end out here, and I have to say it comes to an end. If you missed the opening show out there, the opening hour, it probably, if it is in sync with the QE1 and QE2, both which shortly after, within 25 days or so of those events coming to an end, we saw significant market pullbacks out there. I suspect that's what we see this time around as well as the punch bowl gets taken away, but not until the entire punch bowl gets taken away out there. And, you know, one of the most bullish charts out here has to be the NASDAQ composite. Remember, the NASDAQ composite had taken a fairly decent hit as it moved down into the February areas. I'm just looking for my chart out here so I can punch it up on the screen. Here we go. And we're going to take a look at the monthly chart for the NASDAQ composite. So it had taken the biggest hit to the downside. However, it's got this beautiful, a 23 month? Yeah, I think it's a 23-month pattern out here where it typically cycles and makes a important swing point low or high, and this one did it right on cue. Oftentimes it really does it right on cue, or certainly within the month out here. And I will tell you, if it did it right on cue, April 30th was the number, and April 30th it made a low, not on April 30th, made a low, April 14th, 15th, right around there inside the composite, 39.4603. We have seen conviction with price movement to the upside. The composite is trading inside its monthly swing point, all-time swing point, and that low is 43.5569. You're at 44.64. So long as the NASDAQ composite trades with inside there, it says it will likely go test the highs. Now, it broke out of a 1,500-point consolidation. Did that finally with conviction. Last time it tested the top of that consolidating pattern was back in November of 2012. Since then, it's really been off to the races. No reversal signals since that time, candlestick-wise, in the market. Even the month of April, where we saw the largest downdraft on a monthly basis, no reversal candle signal. So 43.5569 is the number to pay attention to on the monthly chart out here. I think I've got a weekly. I think we're ways away from the weekly swing point, but let's go find out for sure. I should just draw a line across it, and that way we won't have to ever do that again. So let's, what I mean is search for the number. So here is the weekly. The weekly swing point high came March 10th, 2000. That low is 47.22. So you'd have to say 47.22. Let me write it down on a pad of paper. That way it makes it a little bit easier for me. Makes it 47.22.14. So that way I can go type it in over here on the right-hand side. So let's do that. So 47.22.14 is likely. Let's go see if we can find any patterns that take us into that area out here. First, let me just notate it on the chart out here. So that's this, should be this. So yeah, this is the red line right here. So we got 47.22.14. Let's go ahead and make that just a tad bigger out here. So that's the number to be watching. Now let's go see if we can find any pattern out here that would take us up into that area. Well, the first thing you've got, take a look at that nice. We'll have to do that when we get back from this breakout here. I guess I was just rambling on. Right now, you've got the NASDAQ Composite trading at 44.64. We'll go see if we can find a pattern that takes it up into that weekly swing point. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Before we went to break, we were taking a look at the NASDAQ composite on a weekly basis, and I mentioned that very likely what it wants to do is trade up to that 47.22 area. It's a March weekly swing point, March of 2000 swing point out here. And the pattern that could take us out to that price level. The NASDAQ composite has been consolidating, been in a consolidating pattern ever since the February 7th. This is a weekly chart we're looking at. I'll blow it up on my screen a bit out here. Nice little hammer candle that formed here on the week of February 7th. You can see that has been tested several times out here. That low was tested. The highs out here, the March 7th, right around the 43.71 level. Tested back here March 31st as well. Finally broke above it with wide price spread here last week, June 30th, and it's above that level. So a break of a consolidation offers a measured move equal to or greater than a consolidation, and that takes us up into the 47.22-ish type area. So all systems are go there. Let's go out to Orlando to our man Rich. Rich, thanks for calling. Thanks for holding. How you doing this morning?
Doing real well, Steve, and yourself.
Excellent. Thanks so much for asking. I know you want to take a look at Vail. Thank you. You want to go skiing then?
Why not? Sure.
Okay.
This could be a relief from here.
Okay. Vail, V-A-L-E. Tell me what you're doing, what you're looking at, what your targets are, how I can help you.
Well, I'm in the position. I'm on the positive side. It looks like it's nice and strong and moving forward. It's just that I'm trying to get some handle on what price projections we're looking at and what your take is on this particular stock.
Are you the holding at this stage really just a trade for the most part, or a little longer term?
Correct.
Yeah, just a trade. Okay.
A trade. But I'd be looking for a point of, an exit point at some place.
Sure. Okay. So if we take a look at it, let's look at it real quickly here for you on the daily, weekly, and monthly, just to give you an idea of what's going on. So on the daily chart, Vail made a nice high on April the 8th. The high out there, 15.59. The low came in, looks like down around June the 16th, out around the 12.55, the very following session on the 17th out here. So just simply retracement-wise, it's trying to make that dead cat bounce at 0.382 retracement. 1371. If we take a look at market profiles, well above its unfair high at 1289. So that looks good out here. Your next area where you're going to have to make a decision, price-wise, it would appear on the daily chart. It's the May 15th area, somewhere between 1384 and 1422. Volume out there is 14 million shares. Yesterday it moved up with it moved up with 15 million shares. So it's moving into that with swing point. And that's what you want to see. You'd like to see that continue. If it moves into that swing point with volume, more than 14 million shares, it's accelerating in there. What it says to you from the trade standpoint is 1422 is what you ought to be able to get out of it. And then I would just probably adjust my stop. Now, it should have some pretty significant resistance there because, Rich, of that gap down on April 15th. And the April 15th had a gap down to 32 million shares. So the question is that going to be the area that really contains price out there? So that's what I would be looking at as my price target, and just evaluate volume. If it's accelerating with volume, then maybe you have a different decision to make. Weekly-wise, what this says here, as far as resistance areas, it gives us a... let me get rid of the retracement out here, if I can do that real quickly. Okay, retracement. So on the weekly chart, it says 1485. What was the number I gave on the daily? Do you recall where that gap down was?
1422.
Yeah, okay, so weekly says you should find some resistance around 1485. So I'd say 1422, 1485 is what I would be looking at to really tighten the stop up on that trade.
Appreciate it very much. Thank you.
You bet.
Nice
Thanks so much for calling. Now, folks, it is Wonderful Wednesday. I'm only going to be with you for an hour. I've been doing this show with a real queasy stomach. So our man Basil Chapman, he's been kind enough to step up. He's going to hit a homer. He's going to go ahead and fill in for me. Have a great Wednesday, folks. Look forward to seeing you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.